2020 right around the corner, and it may not be so bright for the housing market. Low interest rates and possible housing shortages in key markets could be part of the reason we're going to have that outlook. Meanwhile, millennials, they're not looking to buy, they still want to rent. At least that's what our next guest has to say. Analyst Tim Rood, he's here to explain why a housing shortage may be in the foreseeable future and what it means. And Tim, I want to challenge you on something, because you're making the case that millennials may be getting into the habit of renting, and yet the largest single cohort demographic age group that bought in 2019, millennials. It was almost 40% of the sales went to millennials. So explain to me what I'm missing here.
No, I don't think you're missing. Hi, Adam. I don't think you're missing anything. I think what we're really doing is it's a cautionary tale that kind of alerts folks to the fact that, you know, if there's a lack of supply in the the entry-level market for a home purchasing, then given Americans' bias towards living indoor, they're going to go rent. And they're likely to rent from an institutional investor more so than any other time in history. These institutional investors are trying to change the mindset of the millennials and to get them hooked on the drug of renting. What I would argue is now that you have this huge slug of household creations coming online, as you mentioned, you know, you've got 5 million millennials that are getting ready to hit 30 this coming year. Another big group that's going to hit 39. You've got to find ways to drive them towards home ownership, because you want to make sure they don't have a concentration of wealth, further concentration of wealth to the landowners, and then ultimately at the peril of, in this case, millennials or other renters.
Hey, Tim, Brian Chung here. So then if millennials are indeed preferring rentals, why is that the case? Is it because valuations are just so high that these millennials say, hey, I can't even afford to put the money together or take the loan out, take the mortgage out to get that house? What's the driving factor there?
No, I think that's it. I mean, if you look at the statistics, what it says is that most borrowers or prospective home buyers don't really understand what's required to get a mortgage to buy a house. Most of them will think that they take 20, 25% down. They don't realize that there's all these other resources available to them to assist with down payment assistance and to get them into government programs. So I think largely it's an education thing. But as I get back to the other institutional investors, like I said, they're trying to make a secular change in terms of how people look at home ownership. If you think about this generation coming up, that they're used to a sharing economy, whether it be clothes, cars, workspace, or whatever. I think that mindset is playing out very much in the institutional investors who are looking to even potentially subsidize rents to get people into renting, get them away from home ownership, and then have all the benefits of home ownership in order to the investors versus the millennials.
Hey, Tim, it's Pras. I feel like part of the problem, at least in places like New York City, is that the supply is so low for starter homes for people that are younger. How do you incentivize home builders and people like developers to actually make these cheaper, lower priced homes for people?
Yeah, that's what a tragic enigma of the whole housing market is. You know, you can see why builders stopped building, coming into the recession. They overbuilt for speculation in the housing run-up. You had a crisis, foreclosures. Last thing you want to do is put more inventory on the market. The challenge really happens at a local level, at a zoning level, at a county level, where the builders are really struggling because they can't find buildable lots. Most of these county commissioners don't want any more density, so there's anti-density. You can't build more in those communities. The regulatory costs are upwards of almost $80,000 to build a new home. It takes a long time. And builders became frustrated and never really fixed the supply chain that they had for manufacturing homes. You're seeing some of that change, but that was really the main issues. Local zoning, broken supply chain, and it was cost prohibitive to build at the entry level.
Tim, your outlook for the next 5 years. I know that a lot of boomers are starting to get their reward in heaven, and they're leaving a great deal of money to their millennial children. But those millennials are also forming families and having children. One of the things that drives home sales is school districts. So I know there's concern among people in real estate about, as the boomer generation dies, there'll be these homes that have to get sold. But as those millennials want to get their kids into good school systems, isn't that going to drive the purchasing?
Well, this is the real hope. This is the million-dollar question, is whether or not this, we call it a silver tsunami, actually benefits the housing market versus destroys it. You're going to have 20 million homes that boomers, greatest generation, are going to downsize, move into retirement communities, putting a lot of inventory on the market. The real question is whether or not that's a supply that's going to be obsolete or relevant to these millennials that are going to be building, 10, 15 million more households over the next decade. And there's three things that are driving it locally. There is no national housing market except for when you saw the housing crash and then the housing recovery. Now we're back to kind of a normal status that looks at local economies and says, One, is it affordable? Two, is it desirable? To your point, does it have good school districts, good weather, good amenities? And then ultimately, what's the local economy? So this is going to be a fight at the local level, not at a state level, to see whether or not, again, we can absorb that inventory.
You left out one factor in places like Florida where they're actually talking about is it 10 feet above sea level because of rising sea levels. But got to let you go at this point. Managing Director at the Collingwood Group, Tim Rood, thank you for being here on The Move.
Thanks, man.